Hi, everybody. This is Gary Dean, and this is our nightly video report for Wednesday, March 29th, 2017. Getting this out about 20 minutes before the market closes. I have an appointment I have to be on, so I'm gonna have to take off right around 4 o'clock. So anyway, I'm not really foreseeing anything big happening into the close. If anything, I would expect some weakness, but I'm leaving the door open that they could try to push it higher. But everything is kind of going as planned, and that ABC count that I have, it's still in play. And I think we'll find out as soon as tomorrow whether it's going to be correct or not. And if it's not, then we just want to step aside and not really push the short side because the way that I'm looking at it, this is either going to start real soon, like I said, as soon as either later at the close today into tomorrow. But after we get this, I think we're going to be testing the lows. That's really what my trade is, or we could go lower than that, down to the 2300, 2280. That would make sense. That would actually make more sense. But I'm just, right now, my initial target is looking down to test the lows that we just made, and that's about it. So I have this chart. It's in the email, you guys. I just use it for references. It actually helps me out a little bit. Um, so let's take a look at it. Momentum, we're still overbought on the daily. We're neutral on the 60 minute, but I have it in a green because it's coming off of the lows, and we're above the 50% move. So we're getting closer to the overbought than we already oversold. So it's kind of a green neutral. Um, we're overbought on the 15 and the 5. So we have three of four reds and a kind of a green there. Divergences, we have them on the daily chart, neutral on the 60-minute chart because we're coming off of the bullish divergences. And the reason why I have this as a neutral is because the off of the bullish divergences, we've had a pretty good run. So that move may be playing out right now. Now we have them on the 15 and the 5. So this is really the red flag that I'm seeing, is that you have three of the four charts that are overbought and also showing bearish divergences. So you have to be very careful on, if just trading the long side, then it doesn't mean that we can't head higher. We've seen these divergences drag out, but they're red flags. And we also have the pattern in play that is, that I'm looking at as an ABC. So signal, we're on a buy on the daily. That's just a 15 to 200 that hasn't crossed. We're on a sell on a 60, but today's move and yesterday's move got us on a buy on the 5 and a 15. So that's what has me not pounding the table on the bearish side, because one, if the pattern's going to play out, it's probably going to play out real fast, and it's going to happen, probably by Friday. And but if it doesn't, we already know that we have the 15s and the 5s that are on a buy, meaning the moving averages have crossed. So, you want to have that bearish hat on right now for a possible move, but be quick to take it off if it doesn't happen. And that's it. We're going to know soon enough if it's going to play out or not. And really, the resistance areas, we have the 2365 and the 2370. We went through these already, so we don't really have resistance on the 15 and a 5. So these are the two that you want to keep an eye on. This is also the bullish momentum line. If the bulls can push it through this 2370, then the targets are going to be 2377, 2383, and then 2391. The momentum for the bears, they need to push it through to 2354. That's going to get a quick move down to the 48. I messed this up here. I'm not sure what it is. Let's just do 48 and then 36. I'm sorry. I'll try to figure out what that is. But anyway, the preferred trade is that you want to short strength into these resistance zones, and you really want to put a stop if we get through above this 2383, because most likely, we're going to be marching higher and testing, if not breaking the high. So that's what this looks like on this. Let's take a look at the regular charts here. And this is the 15-minute chart. So we have the bearish divergences, very overbought, two sell signals on there, and we're in the resistance area. So here's the 2370. If they decide that they're going to push it higher, this is heavy resistance, and then we get up into the other resistance. And if they break through it, there's no sense pushing the short side, because it's not, it's probably not going to work. This is the ABC pattern that I'm looking at. Now, yeah, it went down and up, but right at the same thing, but this is the primary move right here. So what we really want want to see is you want to see the Bears push it through this 23.53. If they do that, most likely we're going to get a quick move, and it's going to come down to the 23.48, and then we have the 23.43, and then the 23.36. If they start breaking that, that's when we start coming down and testing these lows, if not breaking them. And if we break them, then it's just going to be this ABC move that's in play, and that's where we're looking at the 2300 to 2280. So I'm kind of up in the air right now. As much as, yes, I'm leaning on the short side, I believe that this still could play, because this is exactly where I had this be. And if it does, it's going to be a great little trade. But it's not one of those things that you want to keep that short, the bear hat on, because if we do get that push lower, you want to start kind of covering your shorts, if it works out as planned, somewhere down in these levels here. Maybe just run with a stop. But once we start getting into this support area, you want to switch over to the buy side and start looking for the rally to start. And that's really what I'm doing, and why, if we get down to these levels here, I'll probably, be cash and then wait for a low to be made and then jump on the long side. And again, the caution is that, this was just an ABC of of a wave 4, and now we're making a wave 5. And I can't throw that out the window, because it hasn't given us any reason to. Either one of the counts can play out. I'm leaning a little bit more on the, obviously the bearish side, just because I think there's a little bit more work to go to get people not as comfortable with buying this market. And I kind of put it in the morning notes that this market has done a flawless job in keeping all retail traders out, whether it be a quick washout to the downside before rallying it, or a huge spike to the upside before pulling the rug and us heading straight down. So, it doesn't really, I don't really have that feeling yet. And you can also tell by the volatility, it's really, the VIX is closer to the all-time lows than it is the highs. And so there's not a lot of people that are scared yet. And I think that if they did give us that little washout until Friday, that will get, the peeps not really wanting to jump in and buy the dips. And then what happens, it allows them to give you this kind of move, and nobody's going to buy it because they were all buying up here and got washed out. And that's typically what they do, is once we start getting up into these levels, they force the retail traders that all got washed out down here to jump back up here. Anybody that was short, they pretty much got washed out. So there's not a lot of shorts and there's not a lot of longs right now. And that's why it's leaving the door open for this wave C. So here you can see where we're above the 50% move here. On the SMI or the momentum. So we're above the oversold. We had the bullish divergences, but we moved up almost 40 points. So this move could be playing out right now. So with that, I keep an eye on this 2365 and the 2370. If they do give you a chance up there, I kind of like it on the short side. And then we just use this, right around that 2385 as a stop. So with that, let's see what plays out tomorrow. Have a great night, and I'll talk to you guys in the morning.